Millions of customers are shocked because banks are merging, and these mergers are happening faster and faster, and they're getting bigger. Just look at this. It says a new wave of bank mergers is just getting started. But why? Well, that's what we're going to discuss in today's video, because my guess is you have your money in a bank, but should you be worried? If you are a little bit concerned over the banking industry and your money in general, go ahead, hit that like button, and now let's begin. Look at this right here. It says 61% of mid-sized banks are fully automated lending, fully automated lending. That is part of the issue. We are seeing some banks are going more towards automation using AI. And as a result, they are getting other banks that are not as informed, not as financially capable of making these changes. And now they're partnering together. They're merging to become a bigger, better bank. But in the end, you're actually going to start losing some customer service. Here's what's happening. Okay, most people don't realize this, but bank mergers and certain acquisitions happen all the time, where one bank will take on another bank and another bank and another bank just to get bigger, to pretty much pull in a certain part of their bank. Like maybe they want to get into commercial lending. Instead of just starting from the ground up, they go find somebody that's doing it and they acquire that division of their bank. You see it all the time. But look at this, okay? We are starting to see some problems emerge as a result of all these mergers and acquisitions. Look at this one right here. It says Bremer Bank staff layoffs due to Old National Bank merger. It says right here, Bremer Bank is laying off 244 employees from its service center in Lake Elmo due to its bank acquisition of Old National Bank. It says the Minnesota Department of Employment and Economic Development, the WARN notice says that the impacted staff will be permanently laid off on October 24th or November 14th. Yeah, that's just one bank. Here's another one. It says PNC to buy Colorado Bank for $4.1 billion as part of a coast-to-coast push. We got this one right here. Dogwood State Bank and Town Bank merger to lead to a combined $22 billion company. We got this one as well. Berkshire Hills Bancorp and Brookline Bancorp to be combined as Beacon Financial Corporation and Beacon Bank upon the closing of their merger of equals. Again, a lot of issues, a lot of changes. But look at this one. Zion's CEO eyes acquisition opportunities. They're trying to bring on other banks, smaller banks, take them over. Look at this. It says right here, Zion's Bank Corporation CEO Harris Simon suggests this week the Salt Lake City-based company is scanning for acquisition opportunities with bank consolidation set to continue. It says in the community bank space, concerns related to artificial intelligence, stable coins, and tokenized deposits may accelerate the pace of consolidation. It says a lot of interesting opportunities are out there. It goes on to say, my hope is that we'll actually be quite good at being able to do that. It says we're a really good partner for some of these smaller ones that still probably are going to be looking for a home. Smaller banks are going to be eaten up. They're going to be taken over by some larger banks. And I'm not saying every single person is going to see their money get switched from one bank to another. But what's going to happen is you're going to see some banks acquire others. They're going to merge. And it's because if they don't, they could go out of business. You see this all the time with certain businesses. You see this with airlines as well, that if certain airlines don't merge, one airline may not be in business that much longer. For instance, Spirit Airlines? Yeah. So again, I bring this up because we are starting to see a lot of people concerned about their money. What is happening with it? Where's it going? Is it safe? I can tell you right now, 2 years ago when Silicon Valley Bank, when it pretty much just collapsed, FDIC came in and they bailed out every single person. Okay, it wasn't just up to $250,000. They bailed out every single person. If you had money in the bank, your money was safe. Even if it was $1 million or $20 million, your money was safe. They did this because they knew that if those people from Silicon Valley Bank didn't have their money protected, businesses were going to go under. That's why they did this. But here's the concern today. The United States government, and that was under a different administration, by the way. The concern today is that the United States government does not have the money to keep every single bank open. They don't have the money to ensure that every single person out there that has over $250,000 in their bank account, that it's going to be safe. And you may be thinking, well, I don't have $250,000, so I don't need to worry. Well, you kind of do. Because what if your employer has all their money in one bank and you go to get your check and they say, sorry, that bank was actually shut down and all of our money was in it. So we don't have the $2 million that we once did. We only have $250,000. That's all that was insured by FDIC. You could be screwed. Your business could go under, right? Your livelihood could be in question, all right? Now, I want to show you something. Look at this right here. It says that bank chiefs push lawmakers on deposit backstop in wake of SVB. That's Silicon Valley Bank. Okay? I want to read a little of this to you. It says right here, bank leaders and regulators urge senators to consider targeted deposit insurance reform to protect business operating accounts, especially in light of digital age deposit flight risk. We are going towards digital banking. Everything's online. Everything's straight from the phone. When was the last time you went into a bank? Let me ask you this. When was the last time you went into a bank and what did you go in there for? The last time I went into a bank, I went in to get a cashier's check. That was a little while ago. Getting that cashier's check was difficult. The reason why it was difficult, for one, is they have to go and check to make sure they have that amount of money in their bank. Okay. So they go and do that. They come back. All right, we're good. Okay, perfect. And you get the check. All right, I'm going to go take it. And then when you get the check and you take it to another bank, they got to call that bank to make sure they still have the money. That they still have that money. Okay? It was ridiculous when I did it. The last time I did it. But then they charged me, and I don't remember what it was now, to actually get a cashier's check. I'm a member of the bank. I pay every single month to the bank, and now they're charging additional fees on top of that. If I want a cashier's check, if I want a printout of my transaction history for the past 30 days or 60 or whatever. That's the crazy part. That banks, now going into the bank, it costs money to go and talk to somebody. They charge me to go and talk to somebody. Or if I go into a specific bank, a certain one, anytime I get anything done, I'm going to go talk to somebody about a financial thing. Okay, well, that's going to be this much. Don't worry, we'll just take it out of your account. Oh, thanks. Yeah, that's kind of what they're doing. So just understand right now, banks are merging at a faster rate. As they do, you should be concerned, but should you be worried about the safety of your money? No. As long as you have your money spread out in multiple accounts in different banks. Been saying this for quite some time. Don't keep your money in just one bank. Keep your money in a small financial institution. Maybe a larger bank. Maybe a Chase. Maybe a Bank of America or Wells Fargo or Citi. Right? Keep a little bit of money there. Also keep your money in a credit union. Maybe you use an online banking service as well. Keep your money spread out because you never know. And I have no clue what the federal government's going to do. I don't know what the banks are going to do if they start to struggle, if there's liquidity issues. because we're still facing those problems as well. So just understand at this time, banks are not out of the woods. They're still struggling. There are reports that there will be more bank closures in 2026 than we've ever seen before. But that's also the reason why more banks are looking to acquire smaller banks at this time to save them, but also grow in the meantime. So we'll see what happens moving forward, but just understand that if you have all your money in one bank, well, sorry to say, but you're at risk.